Hi, everybody. Don Durrett, Gold Stock Data. I was going to go over the Mormons, and then I'll go over optionality plays, the latest update, combine it into one, because the Mormons will only take a few minutes to re to review. So, a friend of mine came up with this idea called the Mormons, meaning that he was going to marry multiple stocks. You know, the whole idea you're not supposed to marry a stock. But in this case, we're going to marry 7 stocks. That's why they're called the Mormons. So we're going to have 7 wives. So I created this portfolio on November 13th, and these are the seven stocks. Now, the reason why I've only picked these 7 is because these are what I call stalwarts. These are the stocks that people are going to buy when the move begins, if you will. And so here we have, I changed my ratings to A through F, but before I did that, I used H for high. So these 3 are the strongest ones: Hecla, Pan American, and Silvercrest. And these are all have a little bit of risk: Coeur, Endeavor, First Majestic, and Fortuna. I have Fortuna as a gold, but they actually have a lot of silver as well. But currently, since they moved well, they purchased a couple of mines in West Africa, so the revenue now is primarily gold. Um, so these stocks are all been up overall 24% since second week in November. The only one that hasn't really performed is Endeavor, but I'm not worried about Endeavor. I think Endeavor is going to catch up to all these other stocks. It's not getting any credit for the mine they're building right now, which is going to lower their cost. And their high cost right now has been impacting them. You can see Coeur up 50% in a month. And that's what all these stocks are going to do. They're all going to be up 50% in a month once silver starts running. I thought that Coeur got, way oversold. I actually bought it at 2.25, and it went all the way down to, I think, $2. The other stock that these are the 2 that I was really looking at to add to, but Coeur and Endeavor, because they're just not getting any love and nobody wants to own them, and so they've really crashed quite a bit. I don't think Coeur is going to come back to 2. Endeavor under $2. I'm hoping to add a little bit here. It's gotten really, really cheap. It's printing as a 20 bagger. All these stocks print as 10 baggers except for Pan American. And I think Pan American can get to 100, but it won't get to 130. But I think it did print like an 8 bagger, but it's a little bit lower than that. But again, these are kind of the stalwarts. These are the stocks everybody's going to want to own. So you really don't want to ignore these. I remember back in 2011, I did not own Endeavor Silver, and it was flying. I was really upset with myself for not owning it. And then I bought it, I think 2016 when it crashed. I waited I bought it at $1.80. And now and so if it gets back to $1.80, I'm definitely going to add more. So the only one that I'm really was underwater was Coeur. And so I bought that one at 2.25, added some shares. So those are the stalwarts. So the next thing I want to go over is optionality plays. So I updated these today, December 5th. And this is the market cap on December 5th. So I created this little spreadsheet for optionality. So we use SilverX as an example. So we have the type, which is a small producer. And then this is the rating on GSD. I have it 4.25. So 4 is the upside, 2.5 is the downside, and B. So I think this stock's going to go 4.3, B plus very soon, one more quarter. The CEO texted me and said that he thinks that the AISC is going to be around $17, but he said it would definitely be below 20. So he's thinking somewhere between 17 and 19. If that's the case, this rating will probably go up I'm thinking 4.3 B plus probably. So that's why it's selected. Everything in green is the ones that I like. Okay, so we have it. Current market cap is 33 million, which is just insane for what they have. They have 150 million ounces of silver equivalent. So in the future, that's current, and so in the future, I'm expecting them to add, get to 175 million. So they're currently valued at 20 cents an ounce in the ground. Anything below 50 cents is just, is on sale, basically really cheap. It's always been the number since I started doing this that I've looked at. I want to buy silver in the ground for 50 cents or less if I'm going to get, a really good price. And I'm valuing them at $5 an ounce. So this green one is the one we change. Everything else is either calculated or estimated or known. This is expected, but this one here is just like if I gave you this spreadsheet, you could change these numbers. So estimated future. So I have Silver X at $5. Silver goes to 100. I mean, in theory, it's basically, now this is just optionality alone. This is silver in the ground. If they sold, I don't know exactly when it'll be at $5, when it's worth that much as a producer, but I don't think we'll have to go all the way to $100 silver. But I'm just thinking in the future, I don't, I think that their silver on the ground is going to get up to $5 an ounce. So if it does, then their valuation would jump to 875 million, and they're currently at 33 million. So it's quite a big leap. So it's 2,500, 25 bagger. The first one, Element, this guy's valued at $2 million market cap. This one is really high risk. So that's what these numbers all, and then I have a little note here. So we'll see how it goes. So the ones that are in green are the ones that I like, prefer on this list. I mean, I kind of like them all. Like I like Minova a lot. I like Bear Creek a lot, but the ones that I think make a lot of sense, if you will, the ones that have kind of the better risk reward, the ones in green. So we have Silver X, Avino. So Silver X down in Peru. Right now they have high costs, but again, next quarter they might be able to fix the problem, and they have enough silver in the ground to really expand production. And if they do that over the next 3 or 4 years, the stock could really explode in value. So it's got some really huge leverage. And then Avino is a very similar story. I think I have it just on optionality alone. I have them as a 25 bagger, but I actually think on free cash flow, it actually prints as a 50 bagger. I have this one as A minus. They have high cost right now, but they don't have any debt, so I don't see them having any problem surviving any type of a downturn. And then they have the La Precocia mine, which is a beautiful mine they got from Coeur. So right now they're trying to get the surface rights, and once they get the surface rights, then they'll do the permitting. So until they get the surface rights, we're still a year away from permitting. I think that's the reason why the market cap has been languishing. Once they get those surface rights, I think it'll start trending higher. But La Precocia, it's going to be a really easy mine to build. Have to put an underground ramp, and they're going to mine off that one ramp, they're going to mine 3 separate veins, 500 tons per day for each one. So over 3 years, they'll just keep adding 1 million ounces a year. And once they build that first one, the valuation of this company is really going to spike. So that one makes a lot of sense. Silver Tiger, this one might be the best stock on this whole list. I don't have it as an A yet because they need to get their permitting, but I'm confident that the open pit, they're going to do an amendment to their underground mine, so it makes it a little bit easier to get the permit. They already have permitting for the underground mine. It's one of the better locations in Mexico, northern Mexico, especially a bunch of mines up there. There's no people up there. They don't have to worry about any natives, the Ojito. They don't have to worry about roadblocks. it's really in an ideal place to mine. And so they have, 180 million gold silver equivalent, and they're going to add, that's going to grow. I only have 200 million. I think that's very conservative, but buying it at 25 cents an ounce, plus I'm impressed with the CEO, how over the last 2 years, how they've executed to get this mine, all the steps you need to do to build a mine. They hired the operator who built and operated two mines for Argonaut in Mexico. So Argonaut basically pivoted out of Mexico, and they went after this guy, and he's an employee now. He's the one that's gonna operate these mines, and it was his decision. He wanted to build the open pit first, and so that's pretty exciting. I think Silver Tiger might be one of the better plays on the board, if you will. It just makes a lot of sense. The next one, Silver Storm. So this used to be Golden Tag. Um, Golden Tag had a project called San Diego. That's where all this silver equivalent is. It's low grade, but they acquired a mine from First Majestic that they're putting back into production. And then that mine, I think that mine's going to be economic at $25 silver. We'll have to wait and see, but I think silver prices are going to go higher here by the time, but they're working on that, getting that mine back into production. They're going to, the mill's in good shape. So the CapEx is going to be low, but the value on Silver Storm is that San Diego project. So once they get this underground mine, the San Diego one is I think it's open pit because it's low. It's pretty much, it's a low grade, which could be an issue, of course, permitting wise. But even at $46 million, just the mine they got from First Majestic is probably a five bagger. And then if you add in San Diego, if San Diego gets built, this thing is a rocket ship. So I think it makes sense here. It's definitely not as strong as Silver Tiger, but it's very interesting. If you're nervous about, can they permit San Diego, that open pit? But 65% of the mines in Mexico are open pit. So it's going to be really hard for Mexico to basically say no more open pits. I mean, that's just a lot of jobs. And we have a lot of huge open pits that need to be built. We have Discovery, we got Chesapeake. These are big open pit mines, but they're going to employ a lot of people. So I think San Diego is going to get built. So it makes sense. Moneta Gold. So Moneta just acquired Nighthawk. So this doesn't include Nighthawk. This is just Moneta. So you can see Moneta with 12 million ounces of gold, currently valued at $5 an ounce in the ground. And then they picked up Nighthawk and they did it. They did not pay a premium for Nighthawk. It was basically a merger of equals, and which was, fantastic deal for Moneta. So now Moneta has, combined these two projects together, gives them more assets. So when they go to, pay for this CapEx, the bank basically has, their bank's going to own both mines. So it makes it easier to finance this, makes it easier to raise money, and it gives them a pipeline. My worry now with Moneta is somebody's going to come in and say, wow, I'm going to get Moneta and Nighthawk both for this very cheap price, because both of them are very, very undervalued. So I think Moneta, very, very solid. Now, the reason why I like SilverX better than Moneta is SilverX is more advanced. They want to begin construction in next year, not in 2024, excuse me, 2025. They want to begin construction. Moneta is not quite that close yet. International Tower Hill. So I have this one. I've watched this stock for over 10 years, and they're finally getting closer to permitting. But this is a really good project. 16 million ounces of gold. You're buying it for $6 an ounce in the ground. This mine is going to get built. It's going to be economic. It's going to generate a boatload of cash flow. And I think the time is right, and it's come up. It's 98 million market cap right now. You could actually bought it less than that very recently. I added to it when it was down to like 75 million. So it's starting to move. But this is a stock that, 16 million ounces of gold. Once gold gets to say 2,500 and they get their permit, and I'm sure they're going to get their permit. It's in a good location in Alaska. Alaska wants gold mines. They're going to get it. And once they get their permit and they get their financing, I mean, this stock's going to rocket to 1 billion. So it's a matter of how much money, how they finance this thing, how much they hedge, if they do a stream. That's the risk. But the downside, I mean, I just see a little downside as a long-term hold here. I think it's kind of a five bagger all day long. Aftermath. So aftermath, I mean, it's cheap, where you're paying 25 cents an ounce in the ground. How can you not do it? My worry with aftermath is I just don't think management, they say that they want to build this mine, but I don't know if their heart's in it or not. I just get the feeling they're just de-risking this thing, getting it closer and closer and closer, and they're going to sell it and just take a payday. That's my worry with aftermath. But I hope I'm wrong. If they take this thing to production, I think this thing's a 5+ bagger all day long, probably a 10 bagger, because they have a lot of silver equivalent. So Discovery. Um, if Discovery was more advanced, then I would like it even better than Silver Tiger. I tend to say that Discovery is my favorite development play, and it might be because they have 1 billion ounces. But yeah, I mean, push came to shove, and I had to choose between Discovery Silver and Silver Tiger. I would pick Discovery Silver just because they have 1 billion ounces. It's just so much silver. So I'm only valuing them at 750 million. They got another 250 million in their back pocket. I mean, if silver prices keep going higher, that additional 250 million will get mined as well. So this is a lot of silver that they have. I have it right, just optionality alone, at $4. The reason why it's at $4 instead of 5 is because they're going to have to do some dilution to build this mine. So I have it just on optionality alone. I have it as a 10 bagger. Um, so, but and free cash flow wise, it's much higher than that, I think. So this is the one worry about Discovery, of course, is it's in Mexico. It's an open pit. People are worried about permitting. I've, I've I like their management team a lot. I don't think they're very confident because where it's located, the town and the cities around it. I'm not sure if there's any cities, but there's some towns and villages. They want this mine because they know how many jobs it's going to provide. And we're talking 20, 30, 40 years. This is a super long life mine. And they know that. So the communities around it know just, this is a career maker for a lot of people. You get a job there and you're set for life pretty much. Um, Treasury metals. This one has just been a huge disappointment for people that have held it. I mean, market cap of $21 million. I mean, it's just silly cheap, right? $7 an ounce in the ground. And it's getting more advanced every day. My worry with Treasury metals is it's kind of a twin of Bonterra, and Bonterra got taken out by Osisko Mining. So why wouldn't Osisko Mining take out Treasury Metals as well? If they're going to take out Bonterra, they might as well take out Treasury because they're right next to each other. They're kind of the same type of projects. And I'm worried about Treasury Metals getting taken out. If they make it to first pour, though, this thing could easily be a rocket ship. So I think you got to hold it just and you cross your fingers they make it to production. Hummingbird. And this is another one that the only thing I'm worried about is they get taken out by somebody else because they're so cheap. $98 million. They're going to produce next year about 200,000 ounces, 175, 180,000 ounces. Their last quarter was pretty solid. They're generating free cash flow. They got a lot of debt, and that's one of the reasons why it has a low valuation. But if they're a 200,000 ounce producer, and let's say we're at $2,500 gold, they're going to be worth $1 billion. I don't see how they can't be. And so it's got basically 10 bagger written all over it. All they have to do is survive next year. I have it as a B plus here, and only a three down the downside, and they have a lot of debt, like $175 million. So, maybe I'm being too optimistic here on their rating. Maybe B plus is too good, but I think right now, as long as gold, if the gold can average 2,000 next year, that's basically what they need. If it averages 2,000 next year, they're going to make that payment that they owe, and their balance sheet is going to basically get cleaned up, and they're going to be in good shape heading into 2025. So there is some risk with their debt, but a ton of leverage with this low valuation, a ton of leverage if they get through next year and they clean up that balance sheet. They have 175 million in debt, and they owe 77 million next year. So once they get that gone and they only owe 100 million, they're going to be in really good shape. So the location of their mines, West Africa, something for you to do some due diligence on. I'm I'm not super concerned about it. I think their mines are going to be fine, but you never know. In West Africa, there's been a lot of coups in the last few years. Um, Next one is Free Gold Ventures. Uh, Free Gold Ventures has 18 million ounces of gold, plus they've been throwing out some amazing numbers. They just keep adding. They just had a big hole over 200 meters, over 1.7 grams, I think, over 1.5 grams. It's a very economic gold. So this is growing. This 18 million. So you're paying $8 an ounce in the ground right now, and it's growing. So this one is a really solid optionality play. The key, of course, is, what do they sell it at? How much do they give this away? Do they sell this gold for less than $75 an ounce? I think gold in the ground will be worth $75 an ounce fairly soon. They will dilute some, but I'm thinking they're going to sell it for $100 an ounce in the ground is my guess. And so this one is a really good optionality play. I think it's in a great location in Alaska, by the way. It's in a mining district. It's one of the ideal locations in Alaska. Heliostar. These guys basically they made a great deal from Argonaut when they bought that Santa Paula mine, and it's heading to production, and it looks fantastic. And they're not getting any value for it. I mean, the market cap's $51 million. You're paying $10 an ounce in the ground, and you're basically getting their mine, their drill story in Alaska for free. I think just Santa Paula alone, if you're just Santa Paula alone's worth, what 10 bagger, just Santa Paula. So then they have another mine that it's even bigger than Santa Paula. It's in Baja, Mexico, that they have a 100% option on if they can permit it. So if open pit mining becomes becomes easier and they can permit that mine, that one's I forget the size of it. I think it's 1.7 million ounces. So they get that permitted. So Heliostar basically has three mines, three projects, not three mines, but three projects that they can work on. And, it looks really strong. I mean, if you go and look at the company presentation of what they're doing down in Mexico, it looks really, really strong. I was impressed with their presentation at Beaver Creek. I mean, you walk when I walked out of that presentation, it's like I got to buy this stock. It's just it looks too solid, and it's bounced off the bottom. I mean, it was 20 cents and it's now up to 30 cents. So it's pretty much off the bottom. So and so Ana Paula is 1.5 million ounces, but I think it's going to grow. And then, yeah, the one in Mexico, the one in Baja is San Antonio, and it's 1.7 million. So if they can permit that one, gives them two mines in Mexico. And then this is the Alaska project, the UNGA. So it's 60,000 acres with a lot of drill targets. They already have 400,000 ounces of 14 grams per ton, including silver. So it's kind of a mine in the making if they can double the size of this thing. And now they're going to have resources to drill UNGA. So that's really solid. And then they have really strong insiders. Eric Sprott, um, he's, I think I have 6% here. So he was at 10%, but he has a position there, and they have enough insiders. I don't think anybody's going to steal this company. So Heliostar looks really solid. The next one, Southern Silver, 335 million ounces of silver equivalent. You're paying 14 cents in the ground. It's one of the better. I have it as an A minus. Very rarely will you see me give an A to an exploration company. But I talked to these guys at Beaver Creek, and they're not giving this thing away. I think $1 is as cheap as they will sell this thing for. So it's a five bagger, I think minimum, and it could be better than that. Um, I don't think that they're going to drill like crazy. They're just going to be patient. I don't think they're going to dilute this thing into the ground. They're just going to be patient and wait for the price of silver to go up. But yeah, Southern Silver is completely being ignored. There's a lot of companies like this. The next one is Barton Gold. This is a company that it's in Australia that did an IPO in 2021. I've been watching it, and now I like it. Basically, it's for me. I like stories that kind of prove themselves. And I think Barton is one of those stories that has basically gotten to the point where it makes a lot of sense from a risk reward standpoint. They have over 1 million ounces of high grade open pit gold, but it's in a district that they own two properties like over 300,000 acres each. That's had over 100 million ounces of production on it, like 50 existing old mines that they have. They basically consolidated this district. I'm saying it's only going to get to 2 million ounces, but I think it's going to get there easily. I probably could have put three. So you're paying $15 an ounce, but you're actually paying less than that. You're probably paying $5 an ounce because of what they're going to find. And it's a very smart team. They all came from large miners. Management owns 25% of the company. They're not selling. They're just going to build this thing into a monster. And it's only valued at $31 million. It's pretty crazy cheap. I could easily have this thing as a 4.3, but they only have 1 million ounces. But it's borderline. It's getting there. You know, they're making fast advances on getting these things into production. But once they get into production, this thing could easily go, 4.3 A minus. Once they get closer and closer to production. I mean, that's how good this thing's looking. But it's one of the better dev stories in Australia that I'm looking at right now. We got Silver Mines. It didn't make this list because they're not as an optionality play. They're just a little too pricey. But the other one that I like a lot is Silver Mines, is development, and then I liked a lot of the producers in Australia. But I'm a big fan of Canada and Australia for location risk. And so Barton kind of gets my attention. Cerrado. Cerrado is building their flagship property in Brazil, and they're not getting any love. I mean, 59 million, and just their mine in Argentina should be worth this much money. I mean, and so they have 2.5 million ounces of gold. I probably should say 3 million in the future, but I'm only saying 2.5. So you're paying $23 today. And again, I think this is less because I think they're going to find more. So you're really paying sub 20, I think. But Cerrado, the one thing I really like Mining in Brazil, I like mining in Brazil a lot better than mining in Mexico. And I haven't seen, a lot of high cost mines in Brazil. It's like as far as costs go, they tend to have an ASIC that's, very economic. And so I think that when they build this mine, their flagship in Brazil, I think Cerrado is going to be very solid. So I like that one a lot. Montage, they have a 6 million ounce project, Cody, in yeah, it's in. I think it's called Coney in Cody. It's very confusing. So, but Montage is one of my favorite gold development stories. The management team came from, and look at this thing. I mean, it's really starting to run. The management team came from Redback Mining, and they were a 500,000 ounce producer. They were a, big company, and they sold to Kinross for over $1 billion. And that's the management team. So the management team is solid. And they have, their insiders are all big names. So this is what I mean by the name. So it's Coney, right? In Cody. So that's really confusing. So they have 500,000 acres and 6 million now. I had it 5 million. And they have a lot of targets, so it's going to grow in size. And they haven't financed this yet, but they told me in Beaver Creek in September that they're very confident that now that gold's at $2,000, 1,900, that they're going to be able to finance the capex because the capex is really high. It's probably going to be about 600 million. So this originally was 490, but it's inflation. It's probably going to be around 600 million, but it's a big mine. They're going to produce about over 250,000 ounces a year, 250 to start. So it's going to be a big mine, and they're going to grow this company. So getting in now, 100,000. I got in when it was down. It was like down to, I mean, it got down like 70 million during this just recently, like a little over a month ago. I think this thing was down. You can see right down here. I mean, this is kind of where I was buying it down here at 55 cents when it was, that's 50% drop. So it was like, I think this thing was in the 60s. So it's really bounced, but it's still cheap. But this is kind of your last chance, I think, to get in. And when they dilute, the one thing it's kind of nasty here is it's at 106, but they're going to probably dilute 100% on this thing, I would think, to pay for that capex. So it's not as juicy as it was when it was down at 70 million and below. It's kind of bounced a little bit. But if you like strong mid-tier producers, and the insiders owns 45%. If you like strong and you want to get a good price for a really strong producer, and Africa doesn't bother you, this is one. This is a company that this is going to be kind of a peer of like Perseus. It's going to be an up and coming mid-tier producer with growth, and I mean that's going to be their DNA. They're going to try to grow that company. So, and then the last one on the list is U.S. Gold, and U.S. Gold. I mean, it absolutely stunning to me that this stock has not moved. Its market cap is 44 million, and this thing is basically permitted. I mean, it's one step away from permitting, and financing is going to be easy. Building the mine, it's an open pit. It's going to be easy. It's going to be economic. They have a very good management team, and it's in Wyoming, which is a good place to mine. Everything about it is positive, and yet it's not getting any, $44 million. You're paying, less than $20 an ounce. This is just optionality alone. When you bring in the free cash flow, I have it as a 4, it actually goes up to a 10 bagger as a free cash flow mine. So the reason why I like doing this optionality is you're looking at a company, you're valuing it from two different angles. So we're not even looking at free cash flow here. We're just looking at resources. And then, okay, you see it. Okay, I like these companies just on optionality alone. Now let's go and look at how it's valued. I mean, that's something you can do. Now let's go look at how it's valued on free cash flow. So we'll go look at Montage and US Gold real quick. So here, this is Montage. We're going to start there. So they have almost 10 million, have no debt, 3 million in reserves, 5 million in M&I, and it's growing. It's an open pit. So I have their future production at 300,000 ounces a year at 1450. So it's basically a low cost mine. I don't know if low cost might not be the right word, but high margin mine. So now we're going to go down and look at valuation. So their future free cash flow at $3,000 gold, I have it at 465 million a year. That's if they expand production to 300,000. And if they do that, they print as a 20 bagger. So if I'm showing them, this is my projection, I think they're going to be, $2.3 billion valuation. Now, a lot of this, when you have these development stories, you just don't know how much they're going to dilute. So maybe I'm wrong. I think worst case, maybe I lose half of this if they do a really bad job on financing the mine. But the free cash flow, that's not going to change, but your upside could change. So this company is going to be generating a lot of free cash flow. So their market cap is currently 100 million. So even if they diluted by 100%, you're still 2 to 1, 2 to 1, and 2 to 1 free cash flow to market cap is usually a 10 bagger. 1 to 1 is usually a 5 bagger. So even if they did 100% dilution, you would still probably get a 10 bagger with Montage. So you can look at it from both angles. Now the other one that I wanted to look at was US Gold. There's another one that, it looks good on optionality because it's only valued at 44 million. Another thing that's nice, they have very tight share structure, 9 million shares outstanding, 12 million total. They don't have a ton of gold, 2.4 million ounces. It's low grade, but they have copper offsets. If you don't like the copper offsets. So I have them, it's a low cost mine, 1450. So the margins will be really strong. But I have them at 155 million free cash flow, and 775 is their projected market cap, and I have them as a 16 bagger. So, it looks like, and I don't think the capex is super big. So this stock looks like a fairly solid 10 bagger, and nobody wants to own it. Let's see what we got here. So the final permit is due in the first half of next year. Once I get that permit, they're going to be getting really close to um, get this thing under construction. Do I have that misconception? Like capex. Okay, so the capex is 220 million. So with inflation, maybe 250 million. The NPV, do we have that on here? I know the NPV is north of that, so it's not a big problem. One last thing is they have this Keystone property in Nevada on 12,000 acres that they think is going to find a nice gold mine. They have 12 high priority targets, hasn't not been drilled yet, but they think it's 1 to 10 million ounces. They've had 150 historic holes, so they know there's gold on the property. But that's the one they're going to go after with their free cash flow. And these guys are really good. I like the team. So even if Keystone doesn't find a mine, they'll go find one somewhere else. This is a company that's going to grow. They have an excellent team. So I like US Gold a lot. They have a nice brand too, US Gold Corp. It's a really nice brand. The tight share structure, I think that's going to really bring in people. And the average price people have paid is like $10. We had this big correction, right? So their shareholders have paid $10 on average. So basically buying this stuff on sale, getting it under $4. So I think that's all I had. Let's go back to the list real quick. So, um, yeah, that's the that's the optionality list. Now, some of these other names that I didn't cover here, I still like them a lot. It's just they're more of a gamble, right? We're taking some of these other names, we're taking a much bigger risk. But Gold Mountain Mining, I mean, I really like this stock a lot. I mean, market cap is $6 million. And I just think, if they get back on their feet again, this thing at one time was valued at 100 million. So just getting back to where it was at, as long as they don't dilute, is well over a 10 bagger. So there's a lot of names on here that I like and I own. I own most of the stocks on this list, but I can't go over all of them. And some of them don't have, the risk reward. But these are all stocks you want to keep an eye on, stocks you want to do some research. I do research on all of these. Like Minova, I mean, 2.5 million market cap on Minova. Um, I, I it's a stock, I just got to own it. Bear Creek's another one. They have 300 million ounces of their Karani project. If they keep that project and they permit, I mean, it's already permitted, and they finance the capex, Bear Creek's going to be a monster. So there's a lot of, you know, very high leverage projects on here that I didn't cover. Nova Minerals, I really like this project for long term. Don't really like it in the near term. It's going to take them some time to advance the project, but it's something I want to own. There's a ton of names on this list that are worth doing some research on. Okay, guys, that's all I got. So I'm going to stop the recording.